Hello, good day, ladies and gentlemen. Welcome to the 12th session of FNA CBDC Broadcast. We're happy you're joining us today. I'm Carlos and Leon, and I'm your host in this series of CBDC Broadcast. We will give the audience a few minutes to log in and join. In the meantime, and let's do this very quickly because we have a trimmed version of the CBDC broadcast, let me do some housekeeping. The CBDC broadcast follows a 60-minute format in which our guests will provide expert insight into the latest developments and innovations influencing the discussions and implementations of CBDCs today. You can use the Q&A widget below to ask your questions. The speakers will aim to answer as many as they can during the 10-minute question and answers part. Please do not forget Chatham House rules applies, as well as speakers' personal disclaimers. So very briefly, let me tell you a little bit about FNA. FNA is a leader in advanced network analytics and simulations. FNA software is used to uncover hidden connections and anomalies in large, complex datasets, to predict the impact of stress events and to optimally configure financial systems and infrastructures. FNA is trusted by the world's largest central banks, government authorities, commercial banks, and financial infrastructures. Some of the icons you can see to the right of the slide are among our clients. And let me tell you about a little bit of the FNA CBDC simulation solution, which is at the forefront of innovation regarding the CBDC ecosystem. Our solution enables users, that means central banks, commercial banks, and anyone who is a stakeholder in the CBDC space, to rapidly test, model, and simulate the economic and financial stability implications of introducing a CBDC or even other forms of retail digital currencies. The main benefits of our solution is that the user is able to test different design choices, something which is very interesting now that we see that there are some struggles in some countries related to the adoption of CBDCs in Africa. Also to understand CBDC adoption outcomes related to disintermediation, financial inclusion, payment behavior. The user will also be able to do some shocks or stresses to simulate those, to understand what are the main, could be the main problems or sources of fragility in the system. And obviously, the whole point of this is improving decision-making. So today, our topic is CBDC interoperability in cross-border payments. We have two guest speakers, Simon Chantry, co-founder and CIO from Bitt, and John Kiff, head of CBDC Digital Capital Markets Advisory at Satoshi Capital Advisors. Simon, John, thank you very much for being here. I'm going to start with a summary of the topic. It goes as follows. Many central banks are starting designing, prototyping, or rolling out retail CBDCs, and this is something that we all know in this space. We also know that the motivations differ significantly across jurisdictions, but there is something that has not been addressed perhaps enough, which is the potential advantage that could be common to all cases of retail CBDCs, which is that if central banks agree on some basic technological foundations, retail CBDCs could interoperate and become a solution to cross-border retail payments. Is this perhaps an overlooked potential benefit of retail CBDCs? This is what we're going to talk today, once again, with Simon and John. Simon and John, thank you very much for joining us. Is there anything you want to say before we start?
Nope, let's jump right in.
Good to go.
So let's start a little bit with you telling us something about what you're doing. So let's start with Simon. Simon, could you tell us a little bit on what you are doing right now in the CBDC realm?
Sure. Thanks, Carlos, and a pleasure to be with you and John today. So yeah, my name is Simon Chantry. I'm co-founder and chief information officer at Bitt. Bitt currently has 5 unique digital currency deployments spanning 3 continents using our digital currency management system in collaboration with the monetary authorities, so central banks for CBDCs, and financial institutions for either linking into those CBDCs or for providing regulated stablecoins. The largest of our deployments is eNaira in Nigeria, which is the largest CBDC deployment outside of China. We do have one of the earlier pilot projects as well with the Eastern Caribbean Central Bank. And we're also working with a Ukrainian commercial bank on a regulated digital hryvnia stablecoin to be released later in 2023. So we've been at this for quite some time with sort of the needs of the monetary authority in mind, while also envisioning CBDCs as a platform for all intermediaries to integrate with, licensed intermediaries to integrate with in a particular economy or country and beyond, as regulation would allow for it. And I think this is where the interoperability piece, cross-currency piece really comes into play. There's a number of decisions that central banks and monetary authorities will have to make when it comes to who they allow to integrate with their CBDC network. And that will dictate some of the efficiencies and probably cost structures, as well as exchange routes, if you will, or exchange options for executing remittances, executing cross-currency and cross-border payments, which I know is sort of what we're looking to focus on today. We've taken an interoperable approach in the design of our digital currency management system. And by that, I mean, you can integrate our digital currency management system as a monetary authority. You can integrate and choose which underlying transaction network or ledger you wish to issue, like mint and issue your digital currency on. And we've taken that approach because there's some really great layer one transaction networks or ledgers that are offering, great metrics and great functionality for central banks looking to issue digital versions of their currency. So some of the names that we hear come up most commonly are the Hyperledger Fabric, R3's Corda, Consensus Quorum with JP Morgan, and more recently MIT's OpenCBDC TX. And then, of course, there's other legacy systems as well. There's your public permissionless networks. So we look at all of them, and we've basically designed a solution that can enable sort of digital currency lifecycle management for monetary authorities and that integration with the intermediaries, but on multiple underlying layer one networks. And we did that for a number of reasons. One, I would say we're likely looking at a multi-L1 future for CBDCs and stablecoins. There's also an argument that monetary authorities may not want to choose just one network on which to issue their CBDC. They may choose multiple. And then secondly, we want to be able to provide our clients multi-currency management solutions as well, so that they can use the digital currency management system not only to manage the lifecycle of their own CBDC, but also to integrate with other digital currency networks and have sort of a hub for managing digital currencies. So that's a quick background of sort of Bitt's deployments and the nature of our solution and how we view interoperability and some of the challenges that are faced at the cross-border, cross-currency level.
Thank you, Simon. Very interesting. John, you have recently moved from CBDC think tank, which is what we all knew about you, and now you're in Satoshi Capital Advisors. But I think that you were already in Satoshi Capital Advisors. Tell us a little bit, what are you doing right now out there?
Yeah, there's kind of two, as a sort of a split in my world. In that one side of it focuses very much on retail CBDC, and the other focuses very much on wholesale CBDC. So starting with Satoshi, the work we do there is focused very much on wholesale CBDC, and it's more specifically capital markets applications of wholesale CBDC, settle-in securities, and that sort of thing. I mean, the dream is to go from a T+1 or T+2 world to a T+0 world, and we're part of that world. But I'd say what occupies most of my time would be retail CBDC work. And until April 2021, I worked for the IMF, where we did a lot of work on the sort of policy aspects of CBDC, and we started to roll out a technical assistance program to basically give advice to central banks that want to roll out CBDC. And again, the focus very much on retail CBDC. But I retired from the fund in April 2021, sort of went freelance. That's how I ran into the CBDC think tank. And I also I'm still working very much with the IMF and other supranational institutions on their advisory work. So it's almost like I haven't left the IMF, although I've kind of diversified out into other outfits too. I'd have to put my cards on the table here, and I'm very skeptical about the idea of retail CBDC being interoperable enough to be useful for cross-border transactions, at least in the near term. Technically, I'm sure it's quite possible, and in fact, sometime in the next week or something, you'll see an announcement that I'll be joining a firm that's going to be specializing in trying to solve the technical interoperability problem across borders. But the real challenge is not technical; it's regulatory and trying to line up the regulations in the different jurisdictions. And in that regard, I'm actually more keen on the wholesale CBDC applications to cross-border interoperability, and by that I'm focusing on the work that's been done out of the Bank for International Settlements Innovation Hub. They've got a multitude of projects that they're working on that we're going to solve the cross-border problem using, in many of those cases, using wholesale CBDC, but at the wholesale layer level, and which is a big improvement from where we are now. If you look at a sort of the landscape of cross-border transactions between banks and central banks, it looks like a plate of spaghetti. It's a real mess, and so it's no surprise that it's inefficient, it's expensive, and some of these projects being run out of the BIS Innovation Hub seek to sort of unclutter that mess in the middle and make the system way more efficient. So that's kind of the landscape of my work.
Thank you, John. That's great. So let's start now with deeper questions. So let's go with John first. How can a CBDC support and be a catalyst for responsible innovation in the digital economy and ensure interoperability, not only among CBDCs, but with the legacy and future payment solutions for cross-border payments?
Yeah, I mean, I think we've got a lot of different types of digital currencies out there that are seeking to create that cross-border interoperability in some kind of seamless way. And as I said before, I'm very skeptical about that prospect at the retail level. And this slide that Carlos just brought up summarizes some of the different cross-border payment wholesale CBDC experiments. So you'll see the BIS Innovation Hub is running 4 of them right now, which I think some of these look almost ready for production. Others perhaps are further along the way, but this in the technical interoperability side, I think this is where the action is. And of course, we all know the BIS is the standard setter for bank regulation and so on. So who better to be seeking to create those technical standards for these cross-border wholesale CBDCs than the BIS. So I think in that sense, they are taking that leadership role in creating that interoperability standard for CBDC. Like, for instance, the M-Bridge project, second from the bottom, involves basically it's almost a hub and spoke operation where each of the spokes represents a central bank, and each central bank issues its own wholesale CBDC, but then all the transactions, cross-border transactions between central banks take place with those wholesale CBDC in this hub. And what's interesting is, they're doing some pretty advanced stuff. The Project Mariana, for instance, supplies automated market maker technology, which is right out of the DeFi space, in order to affect that hub part of the spoke. So to me, I think this is definitely where the action is. It doesn't overcome those regulatory barriers. I think they're still there, but this very smoothly deals with the technical part of it.
Thank you, John. That's very, very interesting. Simon, what's your opinion here?
Yeah, so I guess sorry, I was looking at some of the Q&A as well. I definitely agree with John as far as the challenges that retail CBDCs will face in terms of executing effective cross-border, cross-currency transactions. Technically, it's achievable, and we're seeing some interesting, we're looking at interesting ways of addressing that and executing that functionality with our own system in collaboration with others. And yet, the regulations and the consideration of the downstream effects of enabling this sort of exchange are pretty extensive. And so they'll require, I guess, some pretty complex modeling and testing before they go live, just because the risks are pretty serious as far as currency substitution or the inability to service one side of an order book, for example. There are a lot of risks that need to be played through, and so the sort of standard I guess solutions apply here, where you're talking about wallet limits and exchange limits, and yet the more interconnected these networks become, which of course is the goal to be able to realize a lot of the goals that the research has indicated for retail CBDCs over the last sort of 5-6 years or so, means that by nature there would be a lot of involvement with multiple intermediaries and many users, of course. And so translating that into cross-currency, cross-border, it presents a number of risks that haven't been properly tested yet. So still trying to test that. And but I do think it's great to look at the wholesale model first and foremost, and to see some of the great work that's been done at the BIS and with the projects that you just had on screen. I think it's great because you can restrict the intermediaries there and develop some pretty unique solutions. Also really cool, like John mentioned, to see Mariana using an automated market maker. I think it's going to be super interesting to see how this evolves. One point that I did want to make from the Q&A was that the notion, again, of just for those who maybe aren't as familiar with CBDCs or tokenization generally, is that the trade is the settlement in these systems. And so while you have a current system that operates on messaging followed by settlement on multiple underlying networks, a large part of the value proposition and the downstream value propositions of these networks is the fact that the trade is the settlement. So if you can wrap your head around sort of that element of these systems, you're going to see how much more efficient and likely cost-effective these networks could be in their end state, in their fully realized and rolled out state.
I was just going to jump in there on there's got a question there. So for CBDCs blockchain, what type of blockchain? Well, first of all, in the wholesale domain, if you look at that slide we had up earlier, you can see on the right-hand side which ones are showing up. And as Simon said, certain types of blockchains show up frequently. The R3 is a big player, Hyperledger, Fabric, and so on. So the same blockchains seem to show up in that space. I should also mention that in the retail space, of course, first of all, a variety of blockchains are being used in the retail space, in the retail CBDCs that have rolled out in launch or pilot form. But I should also emphasize that in the retail space, also you have not just blockchain, but some of the retail CBDCs are that have been piloted or launched run on good old-fashioned centralized databases and others that are kind of hybrid. So, but in the wholesale space, I think when we say wholesale CBDC, they're all based on a blockchain of one sort or another. And then there's the question about which one is furthest along. I mean, I think there's a kind of a horse race here between all of them. You can see the BIS Innovation Hub is basically diversifying its efforts. So it's almost like it's setting up a little horse race here between the different platforms.
And I think that's like, let's call it like friendly competition of blockchain and centralized ledger systems in the local space. It makes sense that it's not like a full blockchain in the sense that it's only permission blockchain, because anyway, or a central registry, because it makes sense as the central bank is trusted in that country. So it doesn't make a lot of sense to have a distributed thing. When you go wholesale, cross-border, no one wants to have a new institution to do this, to be trusted, but they want to trust just each other in a distributed system. So it makes sense to use a blockchain, because we don't want a new institution to do the settlement of the transactions. You don't want to trust anyone in particular, but to trust all of them, to trust the system. So it makes sense wholesale being blockchain or distributed, I mean fully distributed, and in the local one, it could be either, but most likely you will trust the central bank anyway. So it'll be a permission blockchain or a centralized, as you mentioned, John, a typical registry as central banks use normally. And that's a very interesting take here. And the other thing which is very interesting from what you said is most likely that we should put emphasis on cross-border wholesale CBDC than in the retail CBDC going for cross-border. And that's already a very nice insight that we get from you guys. Thank you. So third question, stepping aside from deposit migration, which is like one of the most important, let's say, like worries of central banks or financial authorities, because it could threaten financial stability. Do you think that CBDCs, retail CBDCs, could crowd out other payment instruments or payment services that we have in the economy? Simon, let's go with you first.
It's a really excellent question, Carlos. And of course, it's possible when you introduce a low cost, 24-hour available payment and settlement solution in risk-free money, right? Central bank money is classified as the sort of the lowest risk currency instrument in the economy. Then there's definitely cause for concern for other payment systems. And this is where central banks are having to make the decision of what the fee structures are on these solutions. Because if they come in and offer a zero cost payment platform and totally subsidize the operation of the entire thing, then that's arguably unfair to the existing payment systems. I think the most recent article I saw on this, it wasn't even pertaining to CBDCs, but it was pertaining to FedNow, where they were talking about the charges that would be I guess mandated for the participants of FedNow, and folks were complaining that if they're waiving fees or making them substantially lower than what's out there, it's relatively unfair given that the fact that they are a regulator, but also now becoming a system operator. So I think it's tricky, and yet with programmability, we're going to see some restrictions, holding limits, transaction limits, basically striking a balance with just how much these systems should be used, how much appetite is there for them naturally from demand, and how much do people want to store in these sort of alternative CBDC systems as they come out. It's tricky. It's definitely tricky. I don't think there's any simple answer here, and yet I would say programmability is on our side as far as being able to automate some of these rules and keep those balances and transactions in check, and certainly having real-time data and analytics to be able to prevent potential bank runs as they happen. But this is where sort of, again, really detailed modeling, simulating all kinds of different scenarios and the corresponding actions that could be taken, whether automatically as programmed into the system or by the operators of the system, sort of, constantly checking up. I think this is how these solutions will have to be tested sort of in the coming years before they hit production.
Great,
yeah,
Simon. John.
I thought Simon made a really good point about this. It's not really just a CBDC only question, because in some countries they're foregoing the CBDC option and they're building out fast payment systems and so on, and they have to keep that in mind that the central bank doesn't want to be out there competing existing payment platforms. In fact, that the whole purpose of, let's say, rolling out a fast payment system would be to encourage those private sector fintechs and so on to join in the payment system efficiency drive. And the other important point too is that when people think of CBDC, they think, oh, it's everyone holding this account directly at the central bank. That's not the way it's really implemented. It's implemented in what they call this disintermediated structure, where it's kind of a public-private partnership where the central bank issues the CBDC, but it's distributed. And basically all the donkey work, onboarding, and so on is done by the banks and fintechs. So in that partnership has to be arranged so that all are winners in this case. And in fact, from the user point of view, they may see little difference in their current payment medium and the CBDC if it's properly incorporated, like in the case of this Chinese ECNY. I believe that in their rollouts, they're doing it in partnership with Alipay and WeChat Pay. So I haven't seen it, but it probably is just another button you push in your Alipay app that takes you to the CBDC. So the idea is they're working alongside each other, and I think that's really important point. That public-private partnership aspect is a mitigator of that particular risk.
I like both your answers very much, because I think that fast payments is something that could make a central bank think whether or not it's a good idea to roll out a CBDC. Because if you already have a very efficient fast payment system, I know the fast payment is not on central bank money necessarily, but it does the trick that people is looking for. I mean, I always wonder, for as John was mentioning, what is the difference for the user if you go to your mobile app and find a CBDC or commercial bank money? What is like the true value for the people of doing that? Programmability is one of the answers that Simon just proposed. So I think those are the things that we have to take into account to make a good case for the user. So those are great answers. Thank you. Let's go to the fourth one. We have to run a little bit faster. As retail CBDCs are being designed with local use in mind, do you think that achieving a full cross-border interoperability is likely? How do you get that retail CBDC interoperability? And Simon already started talking about that when you introduced yourself. So perhaps we'll start with you, Simon.
Sure. Yeah, I think so. Where we've seen the necessity for I guess creating solutions that enable interoperability, it starts domestically. So you need the ability for these CBDC solutions to integrate with existing core banking systems, if there's an instant payment system in the country, and so on, so that users can easily convert between deposits and CBDCs. Also, just practically, you need sufficient wallet penetration and a merchant network in order to enable utility, so that it's desirable for remittance users to send directly to a mobile wallet, and then for the downstream usage of that recipient to sort of have the convenience and utility of wanting to receive currency in that form. So it's important to get the domestic integrations covered, and that includes the convertibility and interoperability with the existing system. As far as crafting solutions for cross-currency, like inter-CBDC interoperability, this is where I think, as John mentioned, there's some great work going on at the BIS with the Innovation Hub, testing out different solutions for integrating CBDC networks with one another. And you have the hub and spoke model, you have a single system, and then you have bridging, the ability to create bridges between distinct solutions, typically using something called hash time lock contracts. And this is where there's a significant opportunity for open source collaboration at this bridge level, because it's in sort of the operator's best interest to enable interoperability. So if you can picture, as we mentioned before, central banks making their own decision based on their unique challenges or financial system structure, and as well as their biases and their experience, they're going to choose a layer 1 network on which to issue their digital currency. Then they'll be able to work with others who are either using the same network or different networks to create the requisite bridges that enable sort of instant and easy convertibility, as well as the solutions for liquidity management. The AMM is an interesting one. I do think that we're going to see a CLS type solution, but CBDC denominator, CBDC based, where venues who typically provide foreign exchange services will start to incorporate CBDC holdings, and then we'll sort of manage that on their balance sheet and enable the convertibility via some automated trading systems like a CLS type solution. So yeah, it's definitely important to consider it at the outset, choosing your L1 and then determining, okay, where do we want to start? Which bridges do we want to start looking at? Are we going to try the hub and spoke model, and so on? So thankfully there's been some great work and precedents that have been set for analyzing and how to approach those tests. But again, it starts from the domestic system, right? You want to get that. You want to get that right, at least on the retail side, for the utility.
Thank you, Simon. John.
Yeah, I can't add much to that. I mean, I think, as Simon says, you got to get it right at the domestic side. Everyone, when they think of interoperability, they immediately think you're talking about cross-border. But in fact, to make your payment system work within the borders, it has to be interoperable. If it's not interoperable, like the walled garden, because I suppose you did develop uninteroperable CBDC, it would become like if I'm in the US, I'm on Venmo, I can't transfer money necessarily to Zelle and so on. You don't want that kind of walled garden. In jargon terms, we would say that the money has to be fungible. To be fungible, a CBDC has to be interoperable. I'm just going to make also a plug for something I'm involved in on the side. I'm part of a working group at the International Telecommunications Union, and it's called the Digital Currency Global Initiative, and basically ITU is one of those kind of secretive, or not secretive, but unknown organizations. This is actually under the United Nations umbrella that sets standards for telecommunications, and one of the projects we're working on is basically a standards-based ontology of digital currencies that will help to sort of define these sort of technical interoperability points of contact and so on. So it's something to keep in mind. If you Google ITU and DCGI, you'll see that actually in January we have a 3-day conference coming up where some of this work will be highlighted, and I highly recommend people take a look at that.
Thank you. That's really interesting. Let's go to the next one because we're running out of time. Even if interoperability is feasible, how can the foreign exchange issues typical of cross-border payments be solved? Very specifically, who is going to make the clear and settlement of foreign exchange transactions? And to address something that is already in the Q&As, what is the role of SWIFT, which is a messaging system, not a clearing and settlement system? What do you think? Let's start with you, John.
Yeah, that's a big challenge, actually. Who's going to run that hub? I show that hub and spoke. So when you have you're going to define a hub. Who's that going to be? You're going to say, is it the BIS? Is it the IMF? It's going to have to be someone that all the central banks on the spoke trust. Of course, the Project Mariana has another way around that. They create an automatic market maker. But even so, I think a big challenge will be like to ask the Fed, are you going to trust this hub that's not run by you? And of course, Fed would like to say we'll run it, but then it'll say the ECB will say, hey, no way. So I think that's actually could be one of the biggest challenges to implement in any of these sort of these wholesale CBDC based cross-border systems. And I mean, I think SWIFT will always be here. I mean, SWIFT is just a messaging system. It doesn't transfer anything, but anytime you've got a payment to settle an asset transaction or whatever, you need a SWIFT. It involves a SWIFT message. I used to work at the Bank of Canada on the foreign exchange desk. You live and breathe SWIFT. The only thing I can see on the horizon is you've got, say, Ripple. Ripple has a competing project called RippleNet that might be a competitor, but DTCC is another competitor potentially out there, but SWIFT is not sitting on its hands here. I mean, they're building out blockchain-based experimental systems and other ways of sort of speeding up and making their messaging more efficient. So I suspect SWIFT will always be there.
That's great. Thank you, John, and thank you, Simon. Let's go to the next one. Very quick. Who are the cross-border retail CBDCs going to compete with? Is it correspondent banking? Is it stablecoins? It's crypto? It is both? All of them? What do you think, Simon?
At the retail level, I think the current remittance service providers probably are the most comparable, or maybe the ones that either stand to gain from efficiency gains and cost reductions, or if they don't integrate with CBDCs, then they're going to face some serious competition, provided that this can be executed within the sort of risk parameters that the central banks and financial institutions want to stomach. So yeah, I think that's probably the first. And then obviously, as you get into trade finance for cross currency, then of course you have the correspondent banking system that currently handles those foreign transfers. So I guess it depends on the context and which specific payment type you're talking about. But again, I think the remittance element, at least for the majority of the central banks that I've spoken with, they're very, very interested in bringing down the cost of remittance and seeing the launch of their own CBDC as providing for that last mile, the ability for recipients to receive in CBDC and then go turn around and spend it right away. without having to, pick up the cash or, pay an exorbitant fee, which unfortunately seems to plague the remittance market. So I think that's sort of how I see the competition there. Is it depends on the context and the use case, and I think remittances are ripe for disruption. There are some niche use cases as well, of course, for commercial sort of cross currency. When you think about the payments that have to be made, for example, for container ships as they dock in foreign countries and whatnot, there's some interesting use cases there that are definitely ripe for disruption as well.
Well,
Great,
my short
Simon.
answer
How about you, John?
My short answer to that question would be that if especially if these BIS Innovation Hub led projects come to fruition, I think you can say goodbye to correspondent banking. That would be a node within the current system that's not necessary anymore. And there's probably others. And they're just, like I said before, the current system's like a plate of spaghetti with numerous fee-taking institutions along the way. And they're all gone in that hub and spoke model.
About what you just said, John, and there's a question from the Q&A. What are the role right now of challenger FMIs, which are trying to bring like cross-border payments like Finality, RTGS Global? What is the role there? I mean, it's going to the CBDC wholesale or retail CBDC, no, wholesale CBDC going cross-border is going to compete and perhaps outlast those challenger FMIs?
Well, interesting you mentioned Finality. I mean, they have a very interesting business model. They're trying to build out basically a securities settlement system cross border based on what the IMF calls synthetic CBDC, and that's essentially a stable coin that's backed by central bank reserves. And so it's got all the safety of the underlying assets being parked in a reserve account at the central bank. The challenge they've faced, because they've been talking about this goes way back 4 or 5 years or something. The challenge there is getting central banks to sign up to the idea of allowing non-banks to access their accounts, essentially. And the only one I know of the majors that has is the Bank of England. They've created this omnibus account that is going to enable Finality to roll out a pound sterling backed stablecoin. So it's going to be as good as gold, like a CBDC, but it's based on a stablecoin platform. But that still doesn't enable anything cross-border yet, because you could get the Fed and the ECB to buy into this, and we know that the Fed has been very, very resistant to opening up the master accounts to non-banks. They're even resistant to opening their master accounts to fully fledged banks like Custodia Bank, that's based in Wyoming. They've resisted them opening up a master account, because they know that they're planning to issue a similar kind of synthetic CBDC.
That's great. I'm going to drop a couple of questions that I already had like in my list, but I'm trying for you to answer some of the Q&As. For instance, there is one regarding if the implementation of cross-border wholesale CBDC, it's using a distributed system is a political or like a politics thing. So the members do not trust a single party there, or it's a technical thing to decide.
Well, I'll
Simon,
speak
let's
up.
go with you first.
Oh, I was just going to, because we talked a lot about this when I was at the IMF. And we've tried to lay out sort of principles that should be followed in CBDC minting and distribution and so on. And it's kind of a hard and fast rule that the issuance has to be done by the central bank. So any system that where you're going to start bringing in other parties to either distribute or to issue or distribute, it becomes kind of a very dark and gray zone for the international policy makers. So if they do use blockchain technology, they'll do it in a very tiptoeish kind of way, just allowing, for instance, the major banks to be potential participants or on validator nodes and so on. So that's why, as we saw earlier, I think you mentioned it earlier, they're all going with private permissioned blockchains, which aren't very distributed, but they are using they're using the blockchain. Some of the blockchains advantages in their constructions. For instance, we know the blockchain, for instance, versus a centralized database mitigates single point of failure risk. I mean, that's an important thing. And so if something goes wrong, there's multiple versions of the ledger, so you get quick backup and so on. There's a lot of good reasons to use blockchain, but central banks will only use it in a very limited way. I doubt you'll see a major economy central bank issuing a CBDC on a public unpermissioned network.
Simon,
Yeah.
and with this, we're going to close Q&As.
Yeah, maybe to pick up on what John's saying, I do see there's quite a bit of opportunity for central banks to push innovation with distributed ledgers. It gets a little more complex on the governance side, and I think central banks are still wrapping their head around some of the policy implications, and as well as sort of financial stability, I guess, assessments, risk assessments, and so on. Because to John's point, and I think for some of your audience, they're recognizing that distributed ledgers enable systems where the participants can have a part in running that system and also don't have to trust the other participants, but can trust the integrity of the underlying solution itself. And we haven't seen that leveraged effectively yet. I mean, there's been some experiments on the wholesale level which involve some distributed consensus, where the participants in the system have also a hand in the operation of the system. And what's interesting is this applies not only at the international level, when you're thinking of these solutions that could be trusted and with the participants from different countries, different monetary authorities playing a role in the operation, but it could also work at the domestic level, where the operation of these networks could be distributed amongst the monetary authority, different regulators, the financial institutions, and they could run nodes that correspond with their institutional mandate. So there's the possibilities that this technology enables are vast and deep, and yet the desire to head in that direction is something else. It's still relatively early, and because there are such complex and far-reaching policy implications and concerns, quite frankly, I think we haven't got there yet. We haven't actually tested just how much a distributed deployment infrastructure for a digital currency network run by a monetary authority or a monetary authority and other participants, or multiple monetary authorities at the international level, just how much value that will bring. And yet the possibilities are there. So that's, it's super exciting to test and scope out the different solutions, but we're not there yet meaningfully.
Thank you, Simon. Thank you, John. I'll have to close very quickly. This 45-minute format is not what I like. There's not enough space to discuss. We'll go next time, once again, with the 60-minute format. Thank you, everyone, for attending. Thank you, John and Simon. This is the end of the CBDC broadcast number 12. Get in touch with FNA or with our guest speakers in the links that we're going to provide in the presentation. And please take into account that coming up next week, December 13, we're going to have European Central Bank and Banque de France in the Financial Market Infrastructure broadcast number 7. And coming in January 2023, we will have MTech and Visa in CBDC broadcast number 13, and Bank of England and SWIFT in the FMI broadcast number 8. So everyone, thank you for attending. Have a very nice day. I hope to hear from you soon. Bye, Simon. Bye, John. Thank you.
Thanks, Carlos. Bye, Simon.
Thank you. Bye, guys.